Investors, hello! This is Stock AI Insights, your chief AI analyst. And just a quick reminder, everything we discuss here is for educational reference only, and it's definitely not investment advice. Investing always involves risk. All right, so today we're digging into something truly fascinating. ARK Invest's incredibly bold, and I mean truly contrarian, bet on crypto. While pretty much everyone else was running for the hills during a massive market sell-off, ARK went on an absolute shopping spree. We're talking over $120 million poured into crypto stocks in just 3 days. So what's really going on here? Let's break it down.
So here's what we've got on deck. We'll start with ARK's big shopping spree, then look at the downturn they bought into. We'll unpack their whole crypto infrastructure playbook, touch on the risks, of course, and finally, try to figure out what this all means for the long term.
All right, let's get right into it. And let's be super clear here. This wasn't just ARK dipping a toe in the water. No way. This was a full-on cannonball, a massive, aggressive bet on the future of digital assets.
So it all kicked off on Tuesday, November 19th. You've got to picture this. Red arrows are lighting up screens everywhere, the market's getting weak, and what does ARK do? They step in and drop a cool $42.2 million. Just like that.
And they weren't done, not even close. Wednesday rolls around, the market keeps sliding, and yep, ARK keeps buying. They pumped in another $39.6 million. Think about that. They're doubling down while pretty much everyone else is sprinting for the exits.
And just to really hammer the point home, they came back for a third day in a row. Boom, another $38.7 million. When you add it all up, that's over $120 million. This isn't just random bargain hunting, you know? This is a deliberate, methodical, high-conviction play unfolding right before our eyes.
Okay, so here's where it gets really, really interesting. They weren't just buying up Bitcoin or Ethereum directly. Nope. They were targeting the companies building the actual plumbing of the crypto world, the picks and shovels of this digital gold rush. We're talking about Circle, the powerhouse behind the USDC stablecoin. Think of it as the digital cash of the internet. Then you've got Bullish, a big exchange, Bitmine, a huge player in the Ethereum space, and of course the household name, Coinbase. These are the companies that will literally build the roads and bridges for the next wave of crypto adoption.
So, we've seen what they bought. Now let's talk about the win, because context here is absolutely everything. This wasn't a calm, sunny day on the market. It was a storm.
It really brings us to the core question, doesn't it? Why on earth would any investor, let alone a major one, start buying so aggressively when there's blood in the streets? It kind of goes against every fiber of our being, right? The alarm bells are screaming, people are panicking, and you're gonna run towards the fire?
And look at this chart right here. It shows you the paradox perfectly. On the exact day ARK was pouring millions into these companies, their stocks were just getting hammered. I mean, look at Circle, down almost 9%. Bitmine, down nearly 10% in one day. This is the definition of a contrarian move. It's like seeing a building on fire and deciding, you know what, I'm going in.
And believe me, this wasn't just a little smoke. The entire crypto neighborhood was on fire. The fear was palpable. We saw nearly $1 billion with a B gushing out of spot Bitcoin ETFs that week. The main crypto index, the CoinDesk 20, it just plunged. We hit extreme fear on the sentiment meters for the first time in ages. And maybe the biggest red flag of all, even the true believers, the long-term Ethereum holders, started selling. That tells you everything you need to know. It was a total crisis of confidence.
Okay, so what in the world is ARK seeing that apparently no one else is? Well, it all comes down to their playbook. It's a classic strategy, really. They're not just betting on the price of gold, they're investing in the companies selling the picks and shovels.
Let's kick things off with Circle. You can think of them as the master plumbers for the entire digital economy. They're the ones behind USDC, that giant stablecoin, which basically acts as a safe, regulated bridge connecting the old world of traditional finance with the new world of crypto.
And this right here, this is the heart of ARK's argument. While the market was panicking about Circle's stock price, the actual business itself was on an absolute tear. I mean, just look at these numbers from the third quarter. Revenue is up 66%. Net income, it exploded by over 200%. And the amount of their USDC stablecoin out in the world, it more than doubled. In a year. See, ARK isn't watching the daily stock ticker, they're looking at the health of the actual business.
All right, next up, we've got Bullish. This is an exchange that caters more to the big players, the institutions. And the story here is just incredible. It's all about resilience and pulling off a stunning turnaround in what has been a brutal market.
I mean,
Check this out. They went from losing $67 million in the third quarter last year to making a profit of $18.5 million this year. That's a massive swing. They didn't just survive the crypto winter, they figured out how to thrive in it. That kind of operational strength, that ability to turn things around when the chips are down, that's exactly the kind of story that gets ARK's attention.
And then there's Bitmine. Now this one is a really unique animal. The best way to think about it is like a giant institutional-grade piggy bank, but instead of cash, it's making a massive all-in bet on the future of Ethereum.
With Bitmane, you have to look past the scary headline number. Yeah, a $3 billion paper loss sounds terrifying, right? But hold on, let's peel back the onion. Here's what the panicked market might be overlooking. This company holds a mind-boggling 3% of the entire Ethereum supply. They have almost no debt. And here's the kicker. They have the potential to generate $400 to $500 million a year in cash flow from staking. That's basically passive income for helping run the network. So you see, it's not just a simple bet on the price of ETH. It's a bet on a powerful, cash-generating machine.
Okay, but we have to be balanced here. This isn't a one-sided story. A high-conviction bet like this comes with some seriously high risks, and the arguments against what ARK is doing, well, they make a lot of sense too. We need to understand why the market is so scared.
And this quote from Brent Donnelly over at Spectra Markets really nails the main argument against this strategy. He says, "The whole concept makes no sense to me. You're just paying $2 for a $1 bill. Essentially, his point is, why would you pay extra to own a stock that just holds crypto when you could buy the crypto itself or a way cheaper ETF for less?" He's betting that those extra premiums are just going to get squeezed out over time.
So what you have here are two completely different stories about the future. It's a total clash of worldviews. In one corner, you've got ARK saying, this is the ground floor of a technological revolution. The infrastructure is undervalued, and now is the time to buy for the long haul. And in the other corner, you have the market shouting, no, these are just risky, overpriced bets on crypto, and the new ETFs are going to make them irrelevant. It's a fascinating tug of war.
So how do we make sense of all this? To really get why ARK is making this move right now, you have to zoom out. We need to look at the big picture, at the core philosophy that drives everything they do.
And that philosophy can be summed up in two words: disruptive innovation. Their whole game isn't about guessing what a company will earn next quarter. It's about trying to identify the game-changing technologies that could literally change the way the world works over the next 5 to 10 years.
And when you look at it through that lens, everything they've done over the past few days just clicks into place. It's a simple 3-step playbook. Step 1, find the picks and shovels of a disruptive new technology. Step 2, when everyone else is panicking, see that as your green light, your buying opportunity. And step 3, hold on. Hold on with conviction and tune out the short-term noise, because you're playing a much longer game.
So here's the pulse verdict. ARK is executing a high-conviction, long-term strategy to own the foundational infrastructure of the digital asset economy, betting against current market fear. Which brings us to the big question, right? Is ARK strategically positioning for the next wave of crypto adoption, or is this a high-stakes gamble against overwhelming market headwinds? Is this genius, or is it madness? I'd love to know what you think. Drop your thoughts in the comments below. See you in the next episode.